Hello everyone, and a very warm welcome to today's webinar on maternity and paternity pay in Stage 50 Cloud Payroll. My name's Duncan, I'm your host and presenter for today's session, and we are joined by my colleague Laura, who will be on hand to help answer any of your questions. So here's the contents of the webinar today. We're going to start with an introduction to statutory parental payments, and we'll give you the latest rates that apply to statutory maternity and paternity. We're then going to talk about recording the maternity or paternity details, and I'm going to show you the quick SMP and quick SPP screens within the software. We're going to look at processing the payment, so checking the statutory pay amount and adjusting your employee's other pay. And we're going to look at the Make Up Basic feature, which can be used if you have a company maternity scheme. And we're going to finish with reclaiming statutory payments at the end of the tax month via your P32 and the EPS submission. We'll try and touch on some of the troubleshooting tips as we go through the demo. We may not have time to cover that in full, and we will stick around at the end of the session to give you the chance to submit those final questions. So on to the introduction to statutory parental pay in general. And here are the 6 statutory parental payments that currently exist. We have statutory maternity pay, or SMP for short, statutory adoption pay, SAP, statutory shared parental pay, and then on the other side, paternity pay adoption, if it's an adopted child, and the most recent one, statutory parental bereavement pay. Now, in this webinar, we're going to focus on the 2 most common of these statutory payments, maternity and paternity pay. But to let you know, we are running another webinar on shared parental pay towards the end of this month. So do check out our upcoming webinars and get yourself signed up if you'd like to learn more about that. So let's take a look at the rates of pay. So these are set by the government and actually funded mainly by the government as well, as you'll be reclaiming these payments. So for maternity and adoption pay, the employee will get 6 weeks pay at the higher rate, which is 90% of their average weekly earnings, that's AWE, followed by 33 weeks at the standard rate, which for the current tax year is 156.66 per week, or 90% of the average weekly earnings if that's lower. So it's a 39-week entitlement if the employee chooses to take the full entitlement, and that applies to both maternity and adoption. Shared parental pay is what you can take if the maternity or adoption is cut short. And as I say, we cover that in our other webinar later this month. Now for the paternity pay, and also for parental bereavement pay, the standard rate is 156.66 per week, or 90% of average earnings if lower, and that's payable for up to 2 weeks, so 1 full week or 2 full weeks of paternity leave. And as I say, it's maternity and paternity that we are going to focus on in today's webinar. So before we go on to entering the details, I just wanted to show you a timeline illustrating some of the key dates involved in SMP and SPP calculations. So over on the right-hand side of the timeline is the due date of the baby, also known as the expected week of confinement, EWC. And 15 weeks before that date is what's known as the qualifying week. So this is key when it comes to calculating average earnings, as it's the 8-week set period prior to the qualifying week, which is used to take that average, which determines the higher rate. So 90% of the average is the higher rate of maternity pay. To qualify for maternity or paternity, they must be employed at least 26 weeks before the qualifying week. So in total, that would be 41 weeks before the due date. And other key dates are the earliest leave date for SMP is 11 weeks before the due date. And if they're off with a pregnancy-related sickness, they would transfer from SSP to SMP if it gets to 4 weeks before the EWC. So don't worry too much about these dates, as the system will calculate them for you, as you'll see when we come to recording the maternity and paternity pay details. So first, let's take a look at what you're going to need in order to set this up. So number one, you'll need to know the date that the employee wants to start their maternity or paternity leave. You'll need medical evidence. That's a MAP B1 certificate for SMP or a signed declaration from your employee for SPP. And those forms will confirm the baby's due date. And for paternity pay, you will also need to know the date the baby was born, as SPP can only start from that date onwards. So that's the information you're going to need. And we're going to show you now how to enter that into your software. Nice, easy process using the quick entry screens. So if I just bring the slides down, you'll see that I am already signed into Sage Payroll. And first thing I'm going to do is enter some maternity details. So to do this, I'm going to select the employee taking maternity leave. For obvious reasons, it will need to be a female employee. Once selected, take a look within the links section if you're in the payroll tasks, and you'll find recording maternity. Or you'll find the same option if you go to your employee tasks, just up here, the recording maternity link. Now, assuming this payment has never been paid before, it'll come up with a blank screen like so. And all you would then need to do is to tick a box to confirm you've received the medical evidence, the MAP B1 form, and then you can go ahead and enter the due date for the baby. So this baby is due on the 16th of July. You can then click check entitlement, and then the system will do a check to make sure the main conditions are met. So you've received evidence, they've worked for long enough, and their average earnings are high enough. And it's then just a case of filling in the employee's last day of work. Now, quite often, an employee will choose to take some annual leave before they officially start maternity leave. And if that is the case, you would class their last day of annual leave or holiday as the last day of work, because the SMP payment will be calculated from the following day. So in this case, the employee is going to work up until Friday the 8th of July. That will be their last day at work. And if I click down here into the other box, you can see that the entitlement now appears for their maternity pay. So it's 6 weeks at the higher rate. So this is 90% of their average weekly earnings, which is set just here. And then 33 weeks at the standard rate of 156.66. Now, if for any reason you need to adjust the average earnings, perhaps if there's been a pay rise awarded at some point between the start of the qualifying week and now, you can adjust it by clicking earnings during set period, and you can overwrite the average earnings figure where needed. And you also see a list of key dates. So qualifying week being the 15th week before the baby's due, 15 weeks before the expected date of birth. So all I'm going to do at this point is to save the details. You can take a printout of the key information, which is really handy. And by entering the details this way, if you were to check within the employee record and go on to the absence tab, you would find in the SMP section, it is filled in the relevant details here as well. And this is where you can start to check the entitlement currently due, which is showing 0 at the moment, but I'll explain why in just a moment. So very similar for paternity leave. So let me select another employee. So this employee's partner's had a baby. They're taking a couple of weeks of paternity leave. Again, I'm going to use the recording paternity option this time. And very similar process. We tick the box to say we've received the declaration. We put in the baby's due date. So let's use the same date. We can put in the employee's last day of work. Now keep in mind that SPP can only start on the date the baby is born or later. So in this case, employee's last day of work is going to be Monday the 11th, because the actual date of birth of the baby just happened to be in the early hours of the 12th. So paternity leave will start on the 12th, and then 2 weeks later, they would be due to return on the 26th. So we've entered actual date of birth and return to work date for paternity because we know it's only a 2-week period. For maternity, you may have noticed that I didn't fill that in. So it's not required to calculate maternity pay, as you can come back and add that information later. So we've got here our 2 weeks of SPP at the standard rate, 156.66. If I click on to save, and then close. We now have the paternity details entered for this other employee. So I'm going to give you a quick preview of the payments for both of these employees. So if I return to the payroll tasks, I'm going to click onto change process date and enter my July pay date. It's always the last day of the calendar month in this example. If I then go into the enter payment screen and click onto the summary tab, you'll see here that the statutory maternity pay has calculated automatically. If you want to see a breakdown of that total amount, you can select it, click the drop down. That takes you into the maternity pay section and click entitlement. So because we've now set our process date to the end of the month, we do have an entitlement currently due. It's 3.29 weeks, and that's part of the first 6 weeks at this higher rate. For the other employee, you can see their paternity pay has calculated. So similarly, if you want to see the breakdown, click the drop down arrow and the SPP type. Then you can hit the entitlement tab, and we can see here, both weeks, 2 weeks, are due for payment now. So that is everything set up. Let's just recap how we recorded those details, and then we'll move on to adjusting the payments. So starting with maternity, we went into the recording maternity option and entered the details from the MAP B1 form, provided by doctor or midwife more commonly. So expected date of birth and last day of work are required. SMP will begin the day after that last day of work. And you can come back and you can fill in actual date of birth and return to work date at a later date should you need to. And then similar for paternity, but this time it was the declaration, the SC3 form. I've actually linked to that on the handout. If you want to see that form, we put in the full details this time. So actual date of birth, return to work date, and the earliest that SPP can start is the date of birth. So always keep that in mind when you're entering the dates. Last thing that we had a look at there in the enter payment screen is if you do want a drill down, if you want a breakdown of how the total statutory payment has been calculated, on the summary tab in enter payments, you can select the amount and click the drop down. And then if you head over to the entitlement tab, you can see it confirms the start of the maternity pay period in this case. You can see anything that was previously paid. So if you're in the middle of paying SMP, it gives you what's been previously paid, and then the total entitlement is shown at the bottom down there. So now that we've recorded the details and you've seen that the statutory pay has calculated automatically, we're just going to run through adjusting your employees' payments. So 2 roads we could go down here. If you have a company maternity or paternity scheme, you might choose to make up to your employees' usual basic pay for some or all of their leave, and you can use the make up basic option to help you with that. Or if you don't have a company scheme and you are only paying the statutory amount for the period of leave, you need to do a manual adjustment to the wages. So let's take a look in the demo. I'm going to stick with the same 2 employees. I'll go back into the enter payment screen. And for the first employee, we do have a company maternity pay scheme for them, and we are going to pay them their full basic pay for at least the first 12 weeks of leave. So this month, we want them to receive their full £2,000 salary as their gross pay, and to do an automatic adjustment so that they receive that amount, I can come to the summary tab, and I can then click Make Up Basic. So it's then going to prompt you to adjust one of your payments, in this case salary, and this is the one we want to adjust. And if I click yes, you can see it's automatically reduced the basic pay, but the employee's total gross pay is their usual £2,000 salary. So it does the adjustment by adjusting the hours in order to reduce the amount. And you can repeat that step for any other period in the future where you want to make up to a specific amount by typing the full amount of salary in, and then go into summary and make up basic. Our next employee, The one on paternity leave, we don't have such a generous scheme for them. So what we're going to do in this case is we're going to manually adjust their basic pay. So we're happy with the 2 weeks of statutory paternity pay they've been paid. And what we'll then need to do is a manual calculation to reduce their salary, only paying them for the days they actually worked this month. So you'll have your own method of working this out. It'll be similar to what you do for new starters and leavers that don't work for a full period. And what I'm going to do is I'm actually going to adjust the hours value, because I know there are 21 working days in July, and I only want to pay this employee for 11 of those working days. So you'll see there's a little calculator icon. So I can do 11 divided by 21. And that is how I've chosen to reduce the salary in this case. So that's what we're paying them for the 11 days worked. And in addition to that, they'll get the £313.32 of statutory paternity pay. So a quick look at the pay slips, so you can see how that information is laid out. I'm going to go into my pre-update reports. I've got some pay slips in my favorites here, so we'll just take a look at this one. And if I just zoom in very slightly, you can see for the first employee, we've used Make-up Basic to adjust the salary. So they're still getting their usual £2,000 this period, made up to their full pay, essentially. And the label will always say parental pay on our standard layouts for these types of payments. And then the other one, where we did the adjustment ourselves, we worked out what that value was. So they're being paid for the hours they worked or the days they worked, plus the statutory payment. So again, I just want to give you a quick recap before we move on to the reclaim. So the 2 ways of adjusting your employees' payments, number 1 was Make-up Basic. So put the full basic in first on the payments tab in the usual way. And then if you click the Make-up Basic button, you'll be prompted to make an adjustment. So that'll bring down the basic for you. Or adjust your payments manually. You could adjust the rate. You might adjust the hours like I did, but it's a manual calculation. Work out what you want to pay them for the time they worked, and the statutory pay will be paid on top. Right, so let's move on to reclaiming statutory payments. I mentioned at the start of the webinar that statutory parental payments are very much funded by the government, and the way they fund that is you reclaim the statutory payment at the end of a tax month by reducing the payment that you make to HMRC. So you're offsetting it against the tax and national insurance paid by the rest of your staff. And for most employers, you'll be reclaiming a standard percentage of 92% of the statutory payment made. However, if you qualify for small employers relief, you get a little bit more. You get 100% of the statutory pay and a further 3% national insurance compensation. So you get back a total of 103% of what has been paid out. Now, if you qualify for small employers relief, and you usually would if your total Class 1 national insurance contributions are £45,000 or less in the tax year prior to the qualifying or matching week, there is a setting that you'll need to select within your company settings to ensure the correct amount is reclaimed. So it's one of your post-year end checks to see how much national insurance was paid in total in the previous tax year. And if you're falling into this 45,000 or less, you should tick the box to confirm that you're still eligible for small employers relief. And once you've dealt with that setting, it's at the end of the tax month that you'll do the reclaim. The reclaim amount will appear on your P32 report, including any NI compensation where applicable. And then you'll need to do an EPS submission at the end of the month to report the amounts that are being reclaimed. So let's just give you a quick demo of that month-end task. So I'll just come out of these pre-update reports. And what I would need to do before I move on is to check whether I qualify for the small employers relief. So here's a tip for you. If you want to run the previous year's P32 to check your total NI figure, you can simply change your process date back to the 5th of April of 22 in this case. So that's the last day of 21-22. And if I go to reports, period end, and P32, employer payment record, I can actually run this for the full year, 1 to 12, and that'll tell me what my total class 1 national insurance was. So you can see here, gross national insurance was £38,294, which means that I still qualify for that small employers relief moving into the current tax year. So I'll just set my pay date back to July. I'm going to go to company and then settings. And on the details tab, the first tab that comes up on the right-hand side, you can see that I have actually already selected eligible for small employers relief. So we've got the correct setting there. It's now just a case of completing that period's payroll. So I'd run my payslips and pre-update reports. I would update the records, taking my backup as I go. You'll see that a message comes up if you've got a reclaim at the end of the month. So it tells us here an amount has been processed and I should complete an EPS to inform HMRC. Before I do that, I'll send the FPS for July. So just part of my usual pay run. You'll actually see that this doesn't contain the reclaim amount. So currently the liability based on my FPS is 5,363, but the actual payment I will make is going to be less than that because of the reclaim. Now I'm at the end of the tax month because I only run monthly payroll and everyone's paid on the same date. So I am now ready to run my P32 for that month. So you can see I can go to reports to run it. There's also a quick link from the payroll tasks if you want to do a P32 report from here. We're going to run it for tax month 4. That's the July tax month. And if I zoom in on this one, you'll see that we've got the PAYE, gross national insurance. So this was the figures that were submitted in the FPS. That was the 5,300. But then, because we've claimed all of our employment allowance, we've got some SMP recovered and the NI compensation, as well as the SPP recovered and the NI compensation on that. So these amounts are going to be deducted from the total amount due, well, to give us the total amount due. So we're actually paying 3,635 due to these amounts that have been reclaimed. Now, in order to report those reclaim values, you need to do an EPS. This is a monthly task. So if you run a weekly payroll, you wait until the end of the tax month in order to submit this. There is a quick link to it in the payroll tasks, or you can go to e-submissions and choose employer payment summary from here. And then you would choose a reason for the adjustment. So in this case, we recover statutory payments, and you would run through this wizard. So it's going to show you the values recovered for the tax year to date. Now, this is the first month that I've actually paid these amounts, these payments. So it's only showing 1 month figure now. But when I do this next month, it will show the cumulative figure because that's what gets submitted. CIS deduction suffered only applies if you're in the construction industry scheme. So it doesn't apply to us. And there's no apprenticeship levy in this example either. So I'm going to complete my submission, like so, and that will allow HMRC to update my PAYE online account, reducing the amount due accordingly. So that's the month-end tasks complete. You've seen how we've reclaimed the statutory pay, and of that pretty much brings us to the end of what we're covering in the webinar. So If you download the slides, you can see there are some troubleshooting tips that we won't have time to go through in today's session. We are looking at perhaps bringing in a separate webinar all around troubleshooting statutory payments. So if that's something you'd be interested in, keep an eye on our upcoming sessions, or leave us some feedback on the survey if that's a topic you might like to join. But I'm going to jump straight ahead to the further support, just to let you know what's available to help you out. And then I am going to stick around, help Laura out answering some of those questions. So if you want to see more Q&A, do stick around, keep your questions coming. Once we've answered them, we will start to wrap things up. But in terms of further support, I would strongly recommend your first port of call being our help centre, which you can access in your browser from sage.co.uk/help, or via the help centre option in the programme. You can search our knowledge base, read our support guides. The webinars link is towards the top of the screen, so you can see what's coming up, and you can also watch our webinar recordings, also various videos and contact options scattered throughout the help site, the help centre. And in addition to that, you have access to Sage University at sageu.com. So from here, you can take e-learning courses, you can do the Sage certification, and there's even some bite-sized learning courses that you can complete, dip in and out of at a time to suit you. So do check them out if you want to know more. So with that said, we're going to spend a couple of minutes just to check for any last questions coming through. Not much came through so far, so you have got a chance to send it through now. If you'd like any of our handouts, just click the handouts icon. There's a printer-friendly version now as well, based on your feedback, and we'll have a look at answering any outstanding questions in the next few minutes. So I've actually seen a question that came through from Alison. If you're still here, Alison, is there any functionality within Sage to assist with working out employer pension contributions whilst on SMP or SPP, as the employer contribution should be on the salary pre-leave? So you make a very good point. With most pension schemes, the pension rules will state that during paternity or maternity leave, the employer will need to maintain their usual pension contribution, and the employee in most cases would just pay a reduced one if they've got reduced pay. So the best way to kind of deal with that, if I just show you in the demo here, would be to switch temporarily to a fixed contribution for the relevant employee. So employee one, I'll use as my example, we're actually making up to basic at the moment, so their pension contribution hasn't really been affected. So contributions have been maintained, as you can see, in line with what was paid previously. But when we get to the point where they're not on full pay, the calculated pension contribution will go down. So if I want to maintain an employer contribution of £44.40 in this example, what I can do, I can manage the pension scheme, and I can click edit. And then you can temporarily, for this employee, set the employer contribution to the fixed amount. So you'd need to check what it was the last time they were paid full salary, £44.40 in my case. And that way, once I've set that, let's imagine they're not getting their full pay from month 2 onwards. If I go into enter payments and reduce the salary right down to nothing, you'll see if I check the employer's contribution, it's still the £44.40. But the employees has reduced down to £35.04. Whereas previously, if we take a look at the pensions tab, it was £59.40. So yeah, that's how you would adjust an employer contribution. You just go to pensions, manage schemes, set it to a fixed amount for the time being. So I hope that answers the question, Alison. Okay, another question's come in from Ralika. hope I pronounced that okay. So, hi, what if we forgot to file an EPS for maternity leave and you've ran the next month? Would that be included in the next month's EPS? So yes, it would, because the EPS always submits a cumulative value. So if you forgot to do an EPS, say for May, and then you're doing your EPS for June, that would contain both May's and June's figures. So it would submit the up-to-date position in terms of year-to-date values, which means over the 2 months, even if it looks like you underpaid in the first month because you reclaimed but you didn't submit it, in the second month, because you'll have submitted the full reclaim amount to date, everything should tie up. So with an EPS, it's the date on which it is submitted that determines the tax period it's allocated to. So between up to the 19th of the following calendar month is the time frame you need to submit it in. So if it was a June maternity leave, maternity pay recovery that you've forgotten, you could actually submit an EPS now, and that would still affect the June tax month. But if you forgot if it was an earlier month, the next one will make up for it because it will be the year-to-date value. So I hope that makes sense. As long as you do it in your next EPS, everything will be fine. Okay, so I think that's all the questions that have come through so far. I'll stick around a few more minutes. I'm conscious that we have gone slightly over the time. However, I will take this opportunity to say thank you for attending the webinar today. I hope you found it useful and maybe you picked up a few tips, particularly around using those quick SMP screens or quick SPP. Do take a moment to complete the survey if you get the chance as you leave the webinar, as this really helps us to keep these sessions relevant and improve them moving forward. And check out what we've got coming up. This month is all about statutory payments. So we've got sick pay next week with Calvin. Get your payroll done is our regular third Thursday of the month session. And then at the end of the month, this month, shared parental leave. So brand new session for you there. So with that said, as we've answered the questions, we're going to call it a day. Thanks so much for joining me today. Enjoy the rest of your week, stay safe, and we look forward to seeing you on the next one. Goodbye for now.